is this an opportunity? You like this stock.
We do think it's an opportunity. Tesla shares are down close to 30% over the last month. You know, we really wouldn't bet against Tesla. Their earnings track record has been outstanding over the last few years. In fact, they've beat in 11 of the past 12 quarters.
That structurally, this company is going to grow 50%, 40%, much faster than I think people are giving them credit for today.
The company is incredibly well positioned to take advantage and leverage the EV revolution.
Traditional car companies are just in a tough spot.
At the time, it seemed rather audacious and rather ridiculous, if not insane. And here he is doing it again.
Oh, hey, I didn't see you there. Just busy posting the 181st exclusive video to Patreon. You really are missing out. If you're not a member, click the card in the corner or the link at the pinned comment to join. Now, in today's video, the world reacts to Tesla's epic Q3 2022 earnings. Wall Street stock analysts sharing their thoughts and opinions. The mainstream finance media chiming in as well. And of course, the stock market itself also reacting to Tesla's earnings. As we can see here, Tesla's stock getting dumped today, down almost 7%. 52-week low achieved today. What a record. $202 per share. Less than half the 52-week high. Of course, nobody could possibly have seen this coming, except this guy.
So let me just check my manual now. Okay, what does it mean when you have a giant dick across your chart? Oh, okay, sorry guys, you're perfect. So, the next obvious step is that the right nut here, Tesla stock is obviously going to crash all the way down to here, around the bottom of the chair. This is called a chair leg drop off the left nut. Is that the left nut? Hang on, I'm disoriented. Okay, it doesn't matter, whatever. That nut there, that one there, okay? So, this is the level that Tesla stock is going to. Obviously, just around here, and I drew a circle just so you know that's exactly where it is, because the more circles and arrows the better. Okay, Tesla stock is going to crash to this exact level right here, and the chart shows that very clearly. So obviously you want to be short Tesla stock because Tesla is just a car company, and technical analysis makes sense.
See, technical analysis makes sense. Undefeated, what a perfect prediction. We definitely saw the chair leg drop off the left nut, Tesla stock collapsing as predicted. This guy's a genius. You should definitely sign up. He's going to be releasing a how to technically analyze stocks course very soon. It's going to be $4,000. It's only a 1-minute course. That's all you need to know. Just how to draw some shapes on some charts to predict the future of a stock and become the world's first quadrillionaire. See, you should have listened to this guy. He was right. Technical analysis. Makes sense. Maybe that guy should start a YouTube channel.
He currently has a buy rating on Tesla with a $304 price target. George, you're a little more optimistic than some of your peers.
Look, our view is a 12-month to long-term view, and we think that the company is incredibly well-positioned to take advantage and leverage the EV revolution.
Will the company have to slash prices? Will the company have to slow down production? Will it be able to keep this 50% annual growth rate towards becoming the world's largest selling automaker? And that's the real question.
I don't want to be too hard on Tim here, but that was pretty dumb. Will the company have to slow down production? Tim, my friend, they will not need to slow down production, at least not anytime this decade.
We have a high degree of conviction that they will grow. And so if we do have a recession, or we're currently going through a recession, it will likely moderate Tesla's growth. But competitively, this may be a really good opportunity for Tesla to do much better than their competition, who may have a lot of difficulty going into a recession.
The dude's right. In fact, I'll go a step further and say a recession is the best possible thing that could happen for Tesla in terms of eating the lunch of other automotive manufacturers. Tough economic conditions are a great filter. When times get tough, the weak disappear.
Stock has sold off, really, into this report. Garrett, is this an opportunity? You like this stock.
We do think it's an opportunity. Tesla shares are down close to 30% over the last month after a big run-up. And, we really wouldn't bet against Tesla. Their earnings track record has been outstanding over the last few years. In fact, they've beat in 11 of the past 12 quarters.
A couple of things. One, don't bet against Tesla or Elon. By the way, if you don't already have your don't bet against Elon merch, what the f*** are you doing with your life? Check out the merch below. Great conversation starter. Regarding Tesla beating earnings estimates in 11 of the last 12 quarters, let's reframe that. In 11 of the last 12 quarters, if you're bad at math, that's more than 90% of quarters over the last 3 years. Wall Street has underestimated Tesla. Tesla didn't miss shit. Wall Street underestimated in 11 of the last 12 quarters. Of course, today's the day that Wall Street finally stops underestimating Tesla, which is why you can absolutely rely on estimates for Tesla deliveries, earnings per share, production growth, you name it. Finally, Wall Street's figured it out, and they'll no longer be off the mark to the downside. They've finally seen the error of their ways. Not This is an indictment on the Wall Street clowns. For the consensus opinions of a bunch of big brain analysts, 150, 160 IQ geniuses, to miss the mark in the same direction to the downside over and over and over and over just goes to show that these folks have no idea what they're doing. If they were missing half the time to the upside and half the time to the downside, I'd be a little bit more reasonable. So, okay, well, they off a little bit, whatever. But if you're always off in one direction, surely at some point you got to learn your lesson. Clearly, they have not. And clearly, next quarter and 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 next quarter, we're going to see the same shit. Oops, Tesla beat again in almost every quarter. I'm just letting you guys know now because it's going to keep happening.
We view Tesla as one of the market's best earnings growth stories at a time when earnings are being broadly impacted by inflation and slowing consumer spending. This is a company, if you take a 3-year view, we see Tesla's earnings per share roughly tripling between 2021 and 2024. They were the auto industry's biggest winner from the Inflation Reduction Act law that was signed in August. And then they have some near-term catalysts. The semi-truck first deliveries are expected in December, followed by the Cybertruck next year. And we know they continue to ramp up their 2 new factories in Austin and Berlin. And they recently completed an upgrade, a capacity expansion of the factory in Shanghai.
For more on Tesla's quarter, let's bring in Gene Munster of Loop Ventures. Gene, no doubt you've been sitting there champing at the bit, listening to this. Is anything we said inaccurate that you disagree with? And you can go right after Tim or Bonawyn.
I might go after everybody on this case. First,
easy to say remote.
Easy to say remote. Agree, Brian.
Did Gene Munster just low-key suggest that everyone on the CNBC panel who'd just been discussing Tesla was completely wrong about literally everything they discussed about Tesla? I think he did.
This is far from a prepared quarter. I'll just kind of articulate what that was. They missed the production or the delivery numbers by 4%. This is back on October 2nd. They missed revenue by 2%. ASPs were 4% below. When you have a growth story, and you use the word miss, that means the stock goes down. That's what we're seeing a little bit in the after hours. I think there's been some anticipation of that over the last few weeks, and that's why the stock has done what it's done. And so I would start with there is a problem here. There's going to be a rethinking about what ASPs. ASPs were down sequentially, down 4%, as I mentioned. That is kind of really you have to think twice about that because of what's gone on with the overall world and inflation. That, of course, was because of the rampant production in China, as Tim had mentioned. But the piece that maybe I would have a different opinion on versus I think most of the esteemed trading panel is that valuation agree. I think Carter was talking about this not being a useful tool, is that it's a useful tool if you have some predictability about where things are going. And in this case, this is probably where I'm going to be different. I don't drink the Kool-Aid. I try to take just a very logical approach to this. And I think at the bottom of at the end of the day is that they're going to go from, call it 120 billion in revenue at the end of 2023 to probably 400 billion in 2026. It's going to be 2027. It's going to be a huge ramp.
Quick sanity check. Now, I believe Munster was referring to 2027. He initially said 26, but corrected himself. That's 5 years out from now. Makes sense. He's probably looking at a 5-year window. Let's compare his estimates of $400 billion in revenue 5 years from now in 27 to my own estimates in my valuation model, which is available exclusively on Patreon. My 2027 revenue estimates for Tesla, full year, in the base case, $363.3 billion in the same ballpark. My bull case, $612.3 billion. A huge difference. Of course, if you want to know what accounts for this huge disparity, join Patreon at the investor level and above, and you'll gain access to my Tesla valuation model with all the assumptions. You can join Patreon with the card in the corner or the link at the pinned comment. The point is, Munster does appear to be in the ballpark. He's one of the few analysts whose estimates are somewhere within the range of my own. Most are so catastrophically, embarrassingly off the mark that I can't help but constantly ridicule them. Munster, not too bad. The irony, of course, I'm sure Munster would watch this channel and think I'm the biggest Kool-Aid drinker of all time. Yet if he looks at my numbers, we're actually in the same ballpark. It's pretty funny.
And where I'm at a different place that gets lost on days like today is I think that traditional car companies are just in a tough spot.
So I just put what Gene Munster said into Google Translate, trying to understand, read between the lines, etc. And what it spat out the other end was, Gene Munster just said that the vast majority of legacy automotive manufacturers will be bankrupt before the end of the decade. You can f***ing count on it. Try it. Type those words into Google Translate. you'll see the same result, I swear.
Something that I've said, we keep talking about competition. We keep talking about them, other players going out and having a significant market share. VW's done a great job, but the rest of the auto industry hasn't. And I think just because Ford comes out with an electric 150, I think the expectations from those buyers are going to be, this is going to be a Tesla-like experience. Be able to charge it when you want to, going to have the software updates that you want to. And I think 1, 2, 3 years from now, there's going to be some disappointment. And I think what Tesla has done, ground up, I think Rivian's also in a great place. I think that gets missed in a day like today. I just think that structurally, this company is going to grow 50%, 40%, much faster than I think people are giving them credit for today.
Spot on. And Gene makes a great point. Buyers of EVs from traditional automotive manufacturers and most new EV startups probably don't realize the experience they're in for when they take delivery, aka a total clusterfuck, an embarrassment, software doesn't work, you have to take your vehicle into a car dealership to update the software because they haven't figured out over-the-air updates. There'll be maintenance issues, reliability issues. Good luck finding a charger that actually works unless you're on the Tesla network. And I'm not saying this as a deluded Tesla fanboy, but somebody whose eyes work. You can see what's going on here. Tesla is the only EV company on the planet who's built out a comprehensive charging network. Everyone else has to either build their own network, good luck with that, or more likely, direct their customers to use something fantastic like Electrify America. Let me describe the typical experience of somebody using the Electrify America network. They turn up to the charging station and the charger says, free of charge. And you think, oh, great, free? Fucking amazing. And then you put your card in and it goes, no, I meant free of charge as in there's no charge here. You can't charge because it's broken. So you go to the next charger and it doesn't say free of charge. It doesn't say out of order. So you start poking the plug in your charging port and you look at the thing and it says, you need to connect your charger to your car. And you're like, it is, you fucking idiot. It's plugged in. Of course, the Electrify America thing says, well, it's not plugged in yet. Try another one. So eventually, after trying every single charger at the entire station, you go, fuck my life. I'm over it. I'm buying a Tesla. You might think I'm making this story up. Ask anyone you know who's used the Electrify America network. What was your experience like? They will pretty much quote exactly what I described. There are some rare exceptions when you can actually get one of their chargers to work. Then, of course, the challenge is waiting 300 years for the thing to actually charge.
Because clearly they have done, from an earnings perspective and from an accounting perspective, what they need to do to stay in the S&P are the Elon risks. And again, the risks around the CEO are the ones that I think are still things you can't really quantify. And corporate governance, I still think is important.
You're going to get punished in the market. Remember, it was Elon who earlier this year was saying that deliveries could rise 60% this year. So the fact that they're not going to hit 50% is troubling to some.
I just want to add some very important context to Tim's comments. While it is true, there are some dolts out there who are troubled by Tesla's failure to grow deliveries around 60% year over year when they were originally aiming for that. They are all dolts, and I'll explain why. There were extenuating circumstances. A year ago, Tesla didn't know that in 2022, the Chinese Communist Party, in an act of absolute idiocy and sheer futility, would forcibly shut down their factory, costing them around 100,000 units of production during the shutdown and slowly ramping back up, in an idiotic attempt at COVID zero. How'd that work out, you fucking idiots? Going back to the people being troubled by Tesla's lack of 60% year-over-year delivery growth. If you add back in the lost production, Tesla's literally on track to do 60% year-over-year delivery growth as they planned and expected. You have to account for these extenuating circumstances. It's only reasonable.
Let's listen into what he had to say about future market valuation.
I'm of the opinion that we can far exceed Apple's current market cap. In fact, I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined.
He did it a few years ago saying that Tesla was going to be as big as Apple, and Apple at the time was, $700 billion. And they ultimately did it, in the last few years. But at the time, it seemed rather audacious and rather ridiculous, if not insane. And here he is doing it again.
This matters. Back in 2015, Elon Musk said off the cuff, you know what, I can see a path for Tesla being worth as much or more as Apple is today. At the time, Apple worth about $700 billion. Half a decade later, Tesla exceeds $700 billion market cap. At the time Elon Musk made these comments back in 2015, the stories in the media, this is absurd, ridiculous, stock pump up, just absolutely ridiculous. Well, guess what? Round fucking 2. After Elon's comments on the earnings call, we just heard a quote there. The same shit in the mainstream media. This is absurd, it's a stock pump, is he going to dump shares, blah, 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 blah. And again, I'll be here in half a decade or so to roast these morons for being wrong once again. As Tim pointed out, he said it at the time, it sounded ridiculous, bordering on insane, just super crazy, and he did it. And now he's doing it again. Let me know in the comments below. Is Elon right? Let's just round things. Will Tesla's market cap ever exceed $4.2 trillion with a T $trillion? Let me know in the comments below. If so, when?
George, in terms of
potential for buybacks. It sort of felt like Elon Musk dangled that carrot for investors who have been a little jittery around the stock. He said $5 to $10 billion is certainly possible. These were his words for next year. I wonder what you make of that. How much of this is about trying to get those investors to stick it out, those who have been concerned about his distractions with Twitter?
Before we hear the answer, just a few quick notes on this. I've heard some extremely strange commentary around the idea of Tesla stock buybacks. For some reason, there's a cohort of investors out there, or armchair Einsteins or keyboard warriors, I don't know who, I don't even know if they own Tesla stock, who seem to be suggesting the idea of buying back Tesla shares would be to pump the stock up, to prop the stock up, to prevent it falling further. It's got nothing to do with that. That may be a side effect of Tesla initiating share buybacks, but that's not the point. The point is, we're piling up insane amounts of money. We put well over $3 billion in the bank just this quarter alone. We already had $20 billion of assets. What are we doing with this? We're spending as fast as we can. Tesla stock, ridiculously cheap, around 12-month lows. Maybe we buy some of our own stock. This is probably better than keeping our money in cash, hence the buybacks. It's got nothing to do with attempting to manipulate Tesla's stock price. A lot of people are confused about this. It's just a good place to put some of their spare billions of dollars.
And is this really the best use of capital for a company? Should that be used towards more CapEx?
Just to be blunt, we don't like it. Buybacks are things that companies like newspaper companies do, not Tesla, that has significant opportunity in front of it. We think there's better use of capital to accelerate CapEx plans, to build cars, to build the robot army that Elon Musk wants to build. It's just, in our opinion, there are just better ways to accelerate their plans around, having EVs proliferate the globe, and other opportunities, including, battery factories and robots. So, look, I'm sure that they've done a lot of math behind it, and they want to see this, support the stock down here in the 200s. But we think ultimately, long term, the best way to support the stock is to grow for as long as you can.
Clueless. Now, I've seen this in the comments a lot. I just want to make sure that everybody gets this. It's really important. You need to understand this, okay? These share buybacks come after Tesla has spent all the money they plan to spend. It's not taken away from growth, okay? Tesla has been extremely clear. They are growing as fast as they possibly can. One more time. Tesla is growing as fast as they possibly can. They are investing as much money in R&D as they possibly can. They are spending as much money growing every aspect of their business and hiring talent as they possibly can. Yet still, they have over $20 billion in cash equivalents, and they put another $3+ billion in the bank just this quarter alone. Share buybacks are not taking away from any potential future growth from Tesla at all. This is really important. Tesla is already spending as much as they possibly can, yet they're still piling up a mountain of cash. Many billions of dollars every single quarter. Tesla isn't taking money away from future plans, future projects, future vehicles. They're not taking money away from anything. They're already spending as fast as they can, yet the money keeps piling up. So what are they going to do with it? Keep it in cash, watch it get eroded due to inflation, invest in shitcoin, or buy back some of their own stock at 12-month lows? Were Tesla not already growing as fast as they possibly could? This would be a fair point, but they are. People just don't seem to get this. The money is going to pile up one way or another. The question is, what is Tesla going to do with it, given that they're already spending as much of it as they possibly can? So I hope everyone is crystal clear on this point. Share buybacks are not stopping Tesla building another factory. That's why they've got over $20 billion sitting in the bank. They've already spent as much as they possibly can. You might say, well, Stephen, why can't they just make 10 more factories right now? Geez, really? Do we really need to go there? Okay. 1, they don't have the battery cells, and 2, they don't have the talent. Make no mistake, if Tesla solved these 2 bottlenecks, they could press a button and have unlimited numbers of battery cells and employees that were trained up to produce vehicles. They could literally be producing 20 million compelling electric vehicles per year today and selling them all. But they don't have the batteries or the talent yet. They know what they're doing. They're scaling as fast as they reasonably can, yet they're still piling up a shit ton of money. Okay, rant over. Let us never speak of this again. Just wrapping things up here, I've noticed a big shift in sentiment from the finance media and the Wall Street analysts in the last few quarters. Just about everyone we saw today is actually quite bullish on the company and their future prospects. Everyone's starting to recognize Tesla's in a dominant position. They have industry-leading margins. Their growth is absolutely fucking insane. And the competition isn't coming anywhere but prematurely fast all over themselves. 177, 178, Oh, sorry guys, didn't mean. I was just counting up all the exclusive videos you're missing out by not being a member on Patreon, having clicked the card in the corner or the link at the pinned comment. Don't mean to rub it in, but 179, 180, 181, and counting. Love ya.